Hey everyone, I'm Jordan Wright, co-founder and CEO of Atomic, and I'm wrapping up our day here at SF FinTech Week with Cynthia Chen, CEO and co-founder of Kikoff, for our series, The Action Layer, which is about the gap between where FinTech is and where it actually changes people's lives. Kikoff helps their customers build credit. Cynthia came to the US as a teenager with no credit history, and that experience is very much at the heart of what she built. Okay, Cynthia, it's so nice to have you here joining me. Thank you for coming. Cynthia, can you start off first by describing what Kikoff is and also your background with it? Because I think kind of your background for why you started the company is fascinating. And then we'll jump into more of the action layer that we're going to be talking about today.
Sure. Thank you for having me here today. Kikoff is a personal finance platform that helps consumers build credit, reduce debt, save money, and also get earned wage access. We started in November 2019 as a credit builder app.
We're a 2019 company too, so we're
we're
coming
the
on
same
7
cohort.
years. Yeah, that's right.
Yeah, it's been 7 years. Well, time passes really
it does.
quickly. We started as a credit building app, and we got traction really, really quickly.
Yeah.
And even became viral during the first few months of launching the product. And as we introduced more credit building products, we realized that the fundamental issue that consumers with imperfect credit had was not just about the lack of credit building products, but was really because of the financial distress that they had, in particular the amount of debt that they had and struggled to pay. So that's why we launched that negotiation to help consumers really address the amount of debt that they cannot afford to pay and get debt relief from debt collectors and lenders.
And was that product number 2?
That was product number 2 outside of credit building. Credit building is about giving consumers access to responsible credit in small amounts so that they can commit to something that they can actually afford and then show consistent payment history.
Yeah.
That is adding positive data to their credit profile.
Makes
But
sense.
it doesn't address the negative data on their credit profile. For example, a debt on which they are already delinquent. For that, you really need to work with the consumer's lender or debt collector and get relief for the consumer so that the amount of debt can be reduced to, let's say, half of the original amount. And the consumer, instead of filing for bankruptcy or going into charge-off, can enter a debt relief program and pay on a monthly basis a much lower fixed amount.
Yeah, interesting. It's interesting, Cynthia, because a big part of the question we're trying to focus on here is you could have come in, and there are systems that do this, and tell somebody what their credit score is. There's a read process for that, right?
Yes.
You came in and said, I'm going to actually take actions to help you solve your credit score problem. Can you quantify the difference in or can you think through, or can you share your thoughts on what's the difference between how compelling each of those two models are? One, showing somebody data, and the other, like, hey, I'm going to actively help you with this. How has that been different for your model? Because there are companies out there that will just show people a credit score. I mean, a couple of them come to mind, Array and things like that, right? But this is very different, and I imagine has a very different monetization path for you.
Showing a credit score is something that almost every financial services company can do these days.
Mm-hmm.
If you were talking about 20, 30 years ago, the credit score used to be a black box that was not easily visible to the consumer unless you paid the credit bureaus or a vendor a pretty expensive monthly fee to access that. Nowadays, lots of banking apps and consumer fintech apps or even identity monitoring apps will give you free access to your credit scores and sometimes even your high-level credit reports. But nothing will change or improve just by getting your viewing. Something has to be done to the actual debt in order for you to have any improvement in your credit profile. So based on the data, we have seen consumers who are offered the actual debt relief feature are, I would say, 20% more likely to engage with the app relative to consumers who did not get offered this feature.
Yeah. Interesting. It's we've talked over the years about different approaches to how AI might be able to enable action on a consumer's behalf. You've obviously done some experimentation there. Would you mind sharing like a thought or two of like what's as you think about AI's we talk about agentic like it's going to go enable us to go do all these things. It's still not doing all these things. But what are the areas that you've seen be more successful on this?
The debt negotiation tool is a very good example. In the old days, debt negotiation is a very expensive service that is very manual. The debt negotiation company will have to call the creditor or the debt collector or go through emails to communicate the consumer's desire to settle the debt and collect offers from the owners of the debt. With AI, we have a digital voice from AI that will talk to the call center operators of the debt collectors and lenders. So their human agents will get requests from our AI agents for consumer debt relief. And if they do have offers, they can communicate the offers to our AI agent, who will then take notes and share the offers with our customers. If our customers would like to take the offers, then they can get back to the lender or debt collector and enter a debt relief program. If they do not want to take the offers because they don't think they are compelling enough, or they even cannot afford a reduced payment obligation, they have nothing to lose. It never hurts to get an offer. Yeah. So AI really brought down the cost of getting debt settlement offers from lenders, because AI voice agent costs even less than outsourced offshore debt negotiation agents.
Yeah, that makes sense. It's such a neat use case. It is, it's so funny because so many people are talking about this future where bots are talking to bots and doing all this work on our behalf. Mm-hmm. You guys have actually done it. You've implemented some solutions that can actually go and on a consumer's behalf go and fight for them. Can you tell us a little bit about the experience of servicing a demographic in financial services that the large banks have largely either ignored or not embraced? Maybe the lower socioeconomic group is, I would imagine, largely your target customer base. What has that been like for you to go chase? And also, maybe also from I know there's a purpose behind it for you too. What is the purpose behind that? And what would you say to those companies that say like, oh, you can't make money off of that demographic?
I think for credit builders, the lower income population, the younger population, and the new immigrant population, especially those who are, say, Spanish speaking, are underserved these days. We responded to that unmet need by becoming the first and perhaps the only credit builder app that is bilingual. So our website is bilingual and our app is also bilingual. And when we opened up our service to Spanish-speaking customers without any advertising, we very quickly got 3,000 customers from Puerto Rico sign up, although we never advertised for Puerto Rico because there were just so few services like ours that would offer a Spanish interface.
Interesting. I imagine that in this process, so you build product one, and this is oftentimes how it is with successful fintechs, right? Large influx of customers. Now you've got to figure out, how do I cross-sell this customer on additional products? How do I create additional products for this? Again, part of me is just like, it's such an underserved segment of the market historically, because people like banks would say, well, they don't have deposits. Why do I want that person as much? But you seem to have created a great or worked on a great niche for yourself in this space. But it's not a niche either. It's a very large portion of the United States that is this way. It's not the mass affluent that the large banks are chasing. Can you talk more about demographics that you're targeting, the size, and that kind of stuff?
1 out of 3 American adults does not have a credit score above 600. Many of them are credit invisible, or like the new immigrants, the young adults, and a lot of them are actually millennials and Gen Zs who got overburdened by things like student debt and high interest revolving credit card debt. So their credit got destroyed, and now they need to rebuild. And traditional financial institutions sometimes are not very enthusiastic about serving that demographic because of the credit risk involved. And banks do have pretty strict regulatory capital requirements. So if you do lend to that demographic, you will need higher regulatory capital, like Tier 1 capital reserves, which is very expensive for some banks to carry. So banks tend to be cautious, and they're also very heavily regulated. Regulators would like them to manage risk very, very prudently. So in order to serve that population well, you really need to be very, very thoughtful, very innovative, and also just drive down the cost radically so that it is a product that they can actually responsibly use and afford. And it sometimes can be difficult for larger institutions to offer that, given the kind of innovation that it takes to drive down the servicing costs of such products. This population is usually not considered as most inexpensive to service, because they do require education and they do have a lot of questions and requests. So the servicing cost for this demographic is actually higher than, say, a typical prime customer. So since they are so expensive to service and you do not make that much money out of the products because they cannot afford to pay you that much. So that's why some institutions are not very passionate about creating products for them.
Yeah, and I kind of want to go two directions here right now, Cynthia, if that's okay. So one of them is, as a founder, how do you avoid the inertia of getting pulled into your existing products, but still allocating resources to go chase new products? It's really hard. I find myself, I used to make fun of a lot of large companies. Like, gosh, why can't they just see the problem, the opportunity staring them right in the face? Now, having run my own company for a while now and having done a few of them, I totally understand the inertia of how we can double down here, we can spend more here, or we can go stand up this new debt negotiation tool and go invest in that. How do you think of, what are the trade-offs that go through your mind on that? And then I want to ask another question about your own personal background with the company you started.
This is a question that we ask ourselves very, very often, because there are so many new bets that a company can make. I think the principle that we try to follow is how big of a pain point it is to our existing user base and our adjacent user base.
Okay.
For example, we observed from customer conversations with customer service associates that many customers were very concerned about debt problems. When we ask open-ended questions such as, what else could we help you with? You're already putting credit with us. The most common response was that, oh, I want to know how to settle my debt. I want to know how to remove my collections accounts. So that is very top of mind for them. That's why we decided to invest a lot in a debt negotiation product. We started that as the traditional manual process because AI wasn't that advanced back then, so we did it the traditional way. And as soon as AI was good enough to handle real-time conversations, we started to train AI to do it and significantly drove down the cost. And now we are able to offer that to every member without any additional cost.
Yeah, thank you. Now, as I understand it, you immigrated to the United States when you were younger.
Yeah.
So you would have been in the credit invisible part of this conversation, or your family would have been.
I was.
You were. Okay. Can you help me understand? But you went on to do, very impressive. You went very impressive school. You got a great job out of college. Help me understand how your personal roots led to this, because you've done other things since. It wasn't the first thing you did. But how did your roots lead to this, and how does it change the meaning of the work?
I came to the U.S. when I was 17 years old. So I was a minor, not even an adult. So, of course, I wouldn't have credit because I couldn't even sign a credit card contract as a minor. And I grew up in a part of the world where personal credit was not even available. So when I first arrived on Columbia's campus in New York City, I was quite amazed that my Columbia classmates who grew up here were all using credit cards to purchase textbooks and meals at restaurants, and I was using cash. So I got very intrigued by credit cards and started to do research online. Then I realized that, there was something called credit, and the credit score was the most important number you would have financially.
Yeah.
And as a new immigrant who had no family, no financial resources, or no other connection in this country, I would need to build credit so that when I graduate from college, I would be able to get a car loan to finance my first car. And most importantly, to get shelter because nobody else would co-sign an apartment lease with me. If I didn't have good credit, I would need someone to co-sign or serve as a guarantor on apartment lease. So I decided to take action as soon as possible. So I waited until my 18th birthday. On my 18th birthday night, I did not throw a party. I spent hours in my dorm building's computer lab researching different credit card options and applied for Columbia Student Affiliate credit card with MBNA, which is not part of Bank of America, and magically got approved for a $500 credit limit. I was like, wow, this is the best birthday gift ever. It really marks my entry into adulthood. So I took the 4 years in college to work very diligently on my credit, always avoided carrying a balance, always paid balance in full each month, never went above the credit limit, and was never late. So by the time I graduated, I had a credit score above 730, which was good enough for me to buy my first car, sign my first apartment lease, and also pass the credit check part of the employee background check by Capital One, which was my first employer. And I picked Capital One over another job opportunity in New York City because I was so intrigued by consumer credit, or in particular credit cards, that I decided to take a job with one of the largest credit card issuers in their credit card division. Yeah, so that's how I started my career in consumer finance. And then I spent 15 years in consumer and small business finance before I eventually founded Kikoff in November 2019. Because during those 15 years, I was able to witness lots of consumers getting declined for different financial products like mortgages or small business loans or personal credit cards because of no credit or poor credit. I realized that, wow, there were like millions of people who were in a very similar situation as I was when I first came to this country. So I wanted to do something for them. And that's the founding story of Kikoff.
It's amazing. It's so funny. I don't think I've ever told this story, but and publicly at least. When I was 20, so I went on a mission for my church when I was 19. So I graduated from high school when I was 18. I went on a mission for my church when I was 19. I was probably credit invisible because I never had any sort of credit card or anything like that. I had no debt. I came home, and then I got a job working full-time and going to school full-time. And as part of that job, I'd have to travel for work. And I remember at the time, I couldn't get a credit card with more than a limit of $500.
$500 seems to be the magical number. I got approved for $500. It looks like that was your limit too.
Yeah,
the banks really like 500.
Yeah, apparently they really like 500. So here I am, and I had to book my first work trip, and I had to do it out of my checking account. At the time, we didn't have a Ramp or Divvy or whatever or Brex, and so I had to book it out of my checking account. And I'd have to come out of pocket on these trips, a fair amount of money, and I wasn't floating on a credit card. And I was doing this for like a year of travel for this company, only to find out somebody was like, "You're not putting on a credit card." I'm like, "I don't even know what a credit card." I don't think I can get more for more than $500. And eventually, I was able to get somebody to co-sign with me a pair. But I was surprised. I would consider I grew up in a very middle to high income. Southern Oregon, so maybe it was middle of nowhere. But I should have had some level of understanding of how this all worked, but I really didn't. And here I was, and suddenly I was like, well, gosh, I'm gonna have to buy a car, and I'm gonna have to go do all these other things. And if I want to avoid paying with cash, if I ever want to buy a home someday, I got to get going on this. And so, at the age of 21, I had to start stepping it up a little bit in terms of my credit. But it would have been amazing to have a tool like yours at the time to help me initiate that credit journey. Maybe as we wrap up, Cynthia, a question that I have for you is, as you look at AI, you have such a neat use case in that credit negotiation or negotiation tool you described. What is your hope for the actions that will be able to come in the next 1 to 5 years that AI will power on behalf of consumers to be able to help take action on their behalf in financial services?
I wish all the manual processes in financial services could be handled by agentic AI, say 3 to 5 years from now. There is still a lot of paperwork involved when it comes to, for example, a mortgage application, which is super tedious. And there are so many things the consumer has to go through, including getting their pay stubs from their employer and getting appraisal done, getting title search done. It is almost a part-time job for a consumer if they are about to buy their first home. It's a very emotionally stressful process. If we can use agentic AI to do all those things for the consumer, I think it will be really, really value-adding. If the agentic AI can integrate with consumers' payroll provider and pull payroll information, maybe with help from Atomic because you're a payroll technology company, and then call a title insurance company or call 10 of them to get the best quote, get the cheapest title insurance for this consumer, right? And read online reviews of different appraisers, right, in this market and get the one with reasonable price and really good service to do inspection and appraisal. I think that will really save the consumers a lot of time and a lot of stress out of this mortgage process.
Agreed. Any other final thoughts for us, Cynthia?
I think consumers need to be careful when they use services provided by AI-empowered company, because some companies may not have the best information security, and some companies may leak your personal data intentionally or unintentionally. So these days, it is so easy for almost anyone to vibe code an app or a product that looks amazing on the surface, but they may not have all the bank-grade information security or the encryption of data in the back end. And if you are going to provide your social security number, date of birth, address, and phone number to a financial service app, you should really try to understand who the developers of the app are. Because so many apps are available these days in the App Store, as the entry barrier is as low as possible these days. So I would encourage any consumer who's sharing sensitive personal information with any AI-empowered finance app to check the credibility of the developer and make sure that there's at least a real person behind the app. If you see nothing about the developer from the website or any other profile page of this developer, I would think twice before giving out all the information. Because if someone has access to all your critical personal information, they should at least let you know what their name is.
Yeah.
And there are definitely apps where you can absolutely find no information about who the developer is.
Wow, that's awesome. Thank you very much, Cynthia. Thank you for sharing. Thank you for taking time to be with us today.
Thank you.